Today we're taking a look at Bitcoin. The cryptocurrency is down sharply and missing out on the risk-on rally that we're seeing today for stocks. More specifically, spot Bitcoin here is down in a big way. You can see that down 8%, well below or more below $8,000 per Bitcoin. And behind this, some of the weakness could have to do with Twitter saying that they are going to ban most cryptocurrency advertising on its platform, similar to what we've seen from both Facebook and Alphabet. But more broadly, today's selling action may also reflect continued uncertainty around regulation and, of course, a popping of last year's parabolic uptrend. Now, relative to that parabolic uptrend, let's hop into the Bloomberg here and take a look at #BTV1211. Now, this is a roughly 2-year chart of Bitcoin. We see that in 2016 and 2017, relatively flat, but above the moving averages. And then last year, the parabolic uptrend. This is a scaled chart, a log chart, so it doesn't really show just how parabolic it was, but basically going from sub 1,000 to 20,000 in less than a year. Then we had this bearish congestion at the end of last year into this year, and that has caused Bitcoin to test down onto the 200-day moving average, pop back up, and now back down. We see a mini death cross. That is when a true death cross is when the 50-day moving average crosses below the 200-day. This is the 50 going through the 100-day moving average, telling you that the near-term sellers are really trying to take over. This chart continues to suggest to me that we could see Bitcoin go all the way back below $1,000 per Bitcoin, which seems pretty impossible. That is why I want to bring in Mike McGlone, Bloomberg commodity strategist. And Mike, what do you think of that chart? What do you think is next for Bitcoin?
Oh, I have to agree with you about the 900. I'm kind of scared to say it, but the death cross kind of scares me. But that's what's happening. The market's turning down. It's switched to a bear market. And I think in the next chart we can really show you that. It's now, should I switch over there now?
Well, this is the parabolic uptrend. So this is a non-scale chart. So here we see just how parabolic it got. And then let's definitely take a look at your chart if we hop back into the Bloomberg. And I love this chart that you brought because it addresses some of the fundamental issues. And here we go.
Yeah, the key thing, I think, there's a few markets where their bell rings at the top, and Bitcoin's one of them. So here you see what happened. This is the beginning of futures. At the same time that futures came out, so in the white we have the Bitcoin, the blue we have futures launched, the CME launched their futures, and the CBOE launched their futures in December. At the same time, you can see in the yellow line the Fed tightened. And that's a key negative for Bitcoin. Since the history of Bitcoin, as you can see if we go back a little bit on the chart, here we had a Fed tightening, Bitcoin dropped down to below 1,000, and we go back here and we went to June, we had another tightening, Bitcoin drops again. So there's a correlation there. Bitcoin has a tendency to peak with Fed tightenings. So we got a Fed tightening.
Why do you think that is, Mike? Because this is so interesting because Bitcoin, you know, people debate whether it's even an asset class, but you're showing pretty convincingly that it is responding to Fed tightening. So why do you think that that's bad for a quasi-asset class, according to some?
It's a good question. I think the key factor is Bitcoin was intended to be a